Yeah, Nitin, welcome.
Hi, Manoj. Hi.
Hi. Yeah, people are slowly joining.
Okay, sure. No.
Yeah, very well. I can recognize you now.
Is it? Okay.
So you were a resident of Nehru Nagar, na?
Yes.
Yeah, I came to know because I am resident of Smriti Nagar.
Okay.
In the same school, maybe a
Right.
senior. I'm
Possibly.
92 pass out of second.
Okay.
Let's wait 2 minutes. We will start then.
Sure. No problem.
Actually, slowly people are joining.
Yeah.
And what we can do is later on, I will ask you they will be messaging me.
Okay.
Normally, we don't allow them any queries, any doubts. At the end, I will take those calls.
And how much time do we have?
1 hour.
Okay. Sure.
I think we can start now. No?
Okay. So should I start?
Just a minute. I will first introduce.
Oh, okay. Oh.
Yeah, good afternoon to all. Let me welcome Mr. Nitin Agrawal for this webinar. Nitin is co-founder of Orowealth, an online wealth management platform which enables retail investors to access zero commission products and high quality advisory service. Prior to founding Orowealth in 2016, Nitin worked for almost 6 years in investment banking division of Deutsche Bank as vice president equity derivative structuring in the London and Singapore office between 2009 to 2015. Nitin was responsible for providing investment ideas and hedging solutions to institutional clients globally and developed several new innovative products during his tenure. Nitin has an MBA from IIM Bangalore and a BTech degree in electrical engineering from IIT Mumbai. He did his schooling from BSP Senior Secondary School, Secretariat Bhilai. He is very much a Bhilayan, and I welcome you because as a Bhilayan, as from Chhattisgarh, you have grown and you have developed, you have achieved the success. Definitely, you will be the right person to guide our students, guide our faculties, the struggle, the hurdles which you have faced. And normally the myth that small town kids may not be able to succeed more,
Right.
that myth is broken by Nitin. I welcome you, Nitin, and hand over the stage to you, please.
Thank you. Thank you. Thanks a lot, Manoj, and thanks everyone for having me here. I feel really excited to share my learnings and my startup experience with you all. As Manoj mentioned, let me start with a bit of personal background, especially given I'm from Bhilai, and then I'll also want to cover kind of mistakes I have done, the learnings I have got, and basically just try to paint a realistic picture of starting up on your own. Because as we read media and we read news, it paints a very different picture versus what is it in reality. So let me start with the background. So first of all, I was born and brought up in Bhilai. My father used to work in Bhilai steel plant. He worked there for 35 years. My parents are still living in Bhilai in Nehru Nagar. So I come to Bhilai very often. And I did my schooling from BSP, first EMS 9, Sector 9, and then senior secondary school from Sector 10, like most of the Bhilai kids. And then I cleared IIT JEE in 2003. This was the year, if you remember, we got JEE rank 1 from Bhilai, which was Shashank Chekhar and Shashank Chekhar Divedi. So both Shashank and I joined IIT Bombay electrical branch. So we were classmates together and good friends now. At IIT, I kind of so after IIT, I did my joined MBA, joined IIM Bangalore for my MBA, and from IIM I got a job in Deutsche Bank in London. The role was basically to give investment solution, to create some innovative ideas for institutional clients like pension funds, hedge funds, asset managers across the globe, right? From Singapore to New York to everyone. So I spent 6 years in Deutsche, 4 years in London, and after that 2 years in Deutsche Singapore. And basically, I mean, that's where I kind of got all my investment experience and the financial knowledge. While I was working on this, I actually started Orowealth in 2015 after leaving Deutsche Bank. I left Deutsche Bank in September 2015 and started Orowealth along with two of my co-founders, Yogesh and Vijay. Both of them were batchmates from IIT Bombay. In fact, we were in the same hostel wing. And the way it started was Vijay, basically after IIT, he joined IIM Ahmedabad, and he was with L&T Treasury in Mumbai, managing their investment book. So Larsen and Toubro, they invest their excess cash, whichever the profits and all they make, they invest in Indian markets. So Vijay was in that team investing money on L&T behalf. So both Vijay and I basically tracking markets and investing money. We were in touch and we kept talking, and we realized that there's a huge opportunity in India in the investment space. This was the 2015 kind of time. This was post Modi election. The basically, all the DII, basically domestic investors started putting money in India at that time. And what our hypothesis was that the retail wealth in India is going to grow. Manoj, if you can make me host, I can share some slides. It will give more.
Yeah, you can
clarity.
share. It is possible. You can share.
Let me share. Yeah. Okay. Yeah. Yeah. So
Yeah,
I
it's
hope you can
visible.
see the screen.
Yeah.
Yeah. So basically, our hypothesis was that retail wealth in India is going to grow. This was in 2015. And within the retail wealth pie, the share of financial assets will grow even faster. So typically, as a retail investor, people have been investing in India, especially in real estate. So you buy some plot of land, you buy some house, or in gold, they buy some jewelry, coins, etc. The share of financial assets, stocks, mutual fund was very low at that time, and we thought that this is going to pick up quite well. Multiple reasons for that. One reason was that Modi government was going after the cash economy, so the real estate was not going to do that well. The second thing was fixed deposit rates were coming down. They were high at that time, 7-8%, and we kind of saw the trend it's coming down globally, and it will come down in India also. So people will want to take more risk and not invest in fixed deposits and all. The other thing is, if you look at the wealth pyramid in India, so on this chart you see basically if you see the 100K to $1 million, which is basically you can say 50 lakh to 5 crore kind of investable wealth. That segment in India is about 19.5, about 2 crore people in India in that segment. Uh, and this segment is growing very fast. So we thought that it's a great opportunity for us to kind of whatever we have learned in the institutional space, what are the best practices they do, what are the mistakes retail investors make, we try to kind of convey those best practices to retail investors. So we started Orowealth as a investment platform where retail investors can get good quality advice. They can kind of invest completely online. They can track their money online and save money. So one of the, I mean, when we kind of have this idea and we want to work on it, first thing is like, why will someone come to you? There are already platforms like ICICI Bank, HDFC Bank. People have their bank account. They can just log in and trade from there. Why will someone come to Orowealth, which is a new company no one knows about it? So one thing we realize is whenever someone is doing an investment online, typically they are investing in, say, a mutual fund or a stock. And mutual fund is, I don't know if you basically know, it's like a product where you can invest in markets, but your money is managed by a fund manager. So you give your money to, say, a Franklin Templeton or a BlackRock or a ICICI Prudential. They will manage your money on their behalf. They will charge certain expense ratios or some money for managing the money, but ultimately the experts are looking at it, and they will make diversified investment. So mutual fund is like a simplest product in financial assets. So I mean, whenever you're kind of investing online in these products at that time, the retail investors are paying commissions inbuilt in the product. So and typically the people were not aware about it. And what used to happen is a lot of mis-selling which was happening. So your ICICI Bank RM will call you and tell you, आपके account में पैसे हैं, why don't you invest in this product? But they kind of try to sell you something which is very risky, which has a lot of commissions for themselves, which they don't disclose. So we saw this opportunity that in India, basically everything is commission based, and people are not incentivized to sell the right product. So we started one of the first online fee-based advisor in the country. So where our kind of go-to market strategy was, we will not charge any commissions. So it will be a zero commission mutual fund, and there'll be no hidden charges. We will charge a 0.1% advisory fee. So basically, it will give two things. One, like normally the retail investor is paying 1%. Here they have to pay 0.1%, so much lower cost. Second thing, because our incentives are aligned, we are taking money directly from the retail investor, not as a commission. Basically, they'll be unbiased. That's how we started. And when we started, we thought it's like a no-brainer because I mean, if you see, I mean, the problem in India is basically the retail MF mutual fund investors are very small. It's like a very low penetration. Only about 23 million people do it now, whereas a lot more people have bank accounts, and it's a product everyone can buy. So there's a large market, and we are giving them a good product, good solution. Plus, they can save a lot of money by coming to us versus ICICI Bank. So it's like a no-brainer. Everyone will just line up and do it, and that's how we can kind of would grow. But when we launched, we realized that it's not how it happens. We launched in 2016, but people were not comfortable paying money for financial advice. Typically, when you're buying, say, from ICICI Bank, two things are there. One, obviously, they trust that ICICI Bank will hold their money safely, so they will not lose the money. So there's a trust factor. Second thing, even though ICICI Bank is charging them money, it's all inbuilt in the product. So they don't have to explicitly pay them. Whereas in our case, they have to explicitly kind of pay money to us. Even though they're paying, say, 10 rupees here and 100 rupees to ICICI Bank implicitly, they thought that explicitly giving money is like more difficult. So taking out money from someone for a financial advice was not heard of in India before, and people were not kind of prepared to do it. Obviously, some people do, but not a lot of people. So we kind of started educating them, started building on it, and over time we started getting a lot of people. One thing we realized is that if we have to take money from a user, we have to make sure that we do some value add. Now, giving value add and I mean, if you in a financial advice is very difficult. For example, if I tell you you have to buy a diversified, say, portfolio, you buy some equities, you buy some debt, you buy some gold, versus another advisor who's saying you buy small cap stocks. In a bull market, when everything is going up, the small cap stock will perform very well. Whereas a good financial advice is you need to have like a diversified portfolio. Someone needs to hold that portfolio over a cycle, see it outperform, then only they will appreciate your advice. So whereas you're charging money upfront, so it was very difficult to show the value add. Like even though we're giving a diversified portfolio, people were not able to appreciate it because remember, these are retail investors, so they don't actually know the nitty-gritties. They just see that like, oh, like that stock is up 20%, your portfolio is up only 5%. Why is that, right? So what we realize is that if we need to kind of show the value add, we have to give them something personalized. I cannot give them a generic advice, say buy Infosys, because that advice they're getting on news channels, on newspapers. I need to tell them like why Nitin should buy Infosys, or why, I mean, what is it in for the end user, giving them a personalized experience. So we started creating a lot of technological tools which will help us personalize the user journey and give them a personalized experience with technology. So, for example, we started looking at what the customers already holds. So, what are their investment goals? Where they are in their life cycle? So, okay, say I know someone is married, has worked for 5 years. They're planning a family, have a child, so they'll want to plan for child education. Now they already hold say 5 different stocks or 2 different mutual funds. Sorry. Yeah. Yeah, so basically they already hold some mutual funds, say some portfolio, they have certain goals. So we started kind of customizing the offering and offering them personalized experience. That's where it started clicking, where people said, okay, I mean, if I'm coming here, these people are telling me what to do and not just giving me generic advice. Uh, uh, then what also happened is some of the institutions saw what we have built. Institutions like, say, brokers like Sher Khan, Protect Securities, and they said, like, can we offer these tools on our platform for our customers? Because I mean, giving personalized advice at scale. So, for example, if you want to give a personalized experience to 1 lakh people, right, in one go, it is not possible, or it's not easy to do without the help of technology. For example, if you see someone like an ICICI Bank, if they give an update or a buy call or a sell call, it will be generic call, right? Buy Infosys or sell Reliance, like that. It will not look at what the particular user is holding, or what is their preference, what is their risk profile, what is the investment goal, and then give the advice. These large institutions saw what we have built in terms of technology, and they liked it, and they said, "Can we offer it for our customers?" So we started something like a more of a partnership approach, where we started partnering with a lot of large institutions and offering them our tools and kind of services. So now, after having kind of built all those partnerships, today we have about 6,000 crores of assets under our retail advisory. Out of that, 550 crores is retail investors AUM, and about 90 crores is non-mutual funds. Remaining 5,000 is about institutional AUM. Then we also have our partners who use our technology. So RBL Bank, if you have an RBL Bank account, if you go to net banking, their investment platform is powered by us. Reliance Jio, they're going to launch within the MyJio app, they're going to launch a mutual fund platform that will be completely powered by us. HT Media, which is Live Mint newspaper, they're going to come up with the investment platform. Again, it's powered by us. And there are companies like Xiaomi, MiPay. So if you have a Xiaomi phone, you will have an MiPay app pre-installed on that phone. It's pre-installed on all 50 million Xiaomi phones. Within that Xiaomi MiPay app, if you see, you will see a Orowealth button where you can buy mutual funds. So basically, we started partnering with large institutions who already have a customer base, and started offering our tools and technology through that. So that's kind of how we kind of grew. Uh, Over the time, we also received a lot of kind of recognition in startups. We are also recognized by Google among the top 20 startups. We won an award by UK government Tech Rocketship Award. We were awarded by HDFC Mutual Fund for #1 wisest advisor in India. So like once you kind of get going, things start working for you. and then you just need to build on it. Uh, in terms of what we are building, I mean, it's very important to have like a long-term vision, what you're building towards. So ultimately, what we're looking to build is like a digital asset management company. So today, we are only giving financial advice. We don't manage money for people. So I can only tell you where to put the money, but I don't take money for you and invest on your behalf, which is what an asset management company does, like a Franklin Templeton or like a ICICI Prudential or an SDFC mutual fund. So our aim is to basically start managing money and not just advising on money, and that will involve getting an AMC license. So today there are only 45 companies in India who have this license, and we want to be one of them, and we want to kind of disrupt that asset management world using technology. It has again three legs. One is the distribution, where how do you distribute your funds or your kind of strategies. Today, all the fund houses are doing it offline, but we want to do it online. As I said, like using API-based distribution, like we're partnering with digital distributors. If you see, like Xiaomi is a digital distributor. They have built in their audience on their app, on their phone. Can we sell our product through them? So that is using technology. On the product side, again, I mean, the way people manage money is very obsolete. There's a lot of people doing research, mainly on Excels, building their own models. All of this can be done technologically using quant, using sophisticated kind of algorithms. You can pick stocks, you can analyze data. So on the product side and on the execution ops, you'll be surprised that today also in India, like if you buy a mutual fund on Friday afternoon, you will get a confirmation from AMCs on Tuesday morning. There are these things which make the user experience very bad, and it all can be solved using technology. So that is the aim, the grand plan, where we kind of do all these things and become an AMC ourselves. Uh, so that's where we kind of heading. Uh, what I wanted to discuss in more detail, and also Manoj told me that like a lot of you also want to start up on your own, and that's why I wanted to kind of give you a flavor of some of the mistakes which everyone makes. We also made, what we learned from it, and in the hope that you don't repeat it, or you at least are aware of that these things happen, and kind of work around it. So obviously we made a lot of mistakes. We made like many mistakes, but I just picked three which are important, which I think definitely can be avoided, and everyone in some form of shape does that. So the first one is the lack of focus. So as a startup, uh, our basically the main advantage we have as a startup is our speed of execution. If you work with large institutions, like I work with Deutsche Bank, I've seen how Reliance Jio works, I've seen how RBL Bank works. If you work with a large corporate, the problem is there are multiple levels of decision making and multiple levels of responsibilities. So anything which has to be built or anything which has to be changed takes a lot of time. Uh, Whereas for startup, we can do a lot of things quickly. So it's a positive thing also, a negative thing also, because we can do a lot of things very quickly and decision making is fast. Typically, we lose focus. We try to do a lot of things at the same time without focusing on one single thing. The actual right thing to do is you need to first master one thing and build on it rather than doing multiple things. For example, in our case, we started as a pure B2C product where we were kind of directly reaching out to customers. Uh, and we launched the platform in Jan 2016. In October 2016, we got a connection with Sher Khan. And Sher Khan was like one of the large brokers at that time. Uh, and they said, like, we like what you're doing. We want to offer it on our platform. And being a like an early stage startup, and it brings a lot of validation that okay, I mean, you're building something these large institutions are looking to add as their product. We should definitely pursue it. But in the hindsight, basically it was kind of lack of clarity on our side, lack of focus on our side, that we were building the B2C and now we want to do a B2B or a B2B2C. And it kind of takes away a lot of bandwidth because anyways, you have very low resources, you have a small team. So today we are 30 people. At that time, we were like 10. It takes a lot of bandwidth. So you need to be very clear what you want to do. Are you a B2C startup? Are you going to sell to businesses or B2B? or you like a B2B2C where you will own the customer but via someone else. So in our journey, we started as a B2C. We did a lot of B2B, so with RBL Bank, with Sher Khan, but ultimately we finally kind of arrived at B2B2C, which is where what we're doing with Xiaomi, where the customers are coming to us via Xiaomi. So we not spending kind of money in getting them directly, but it's also not a B2B where the customers don't come to us. So you need to be very clear what is the strategy, what you're doing. Otherwise, you will waste a lot of time. You will kind of not compound. See, the most important thing is if you do the same thing often and more, you become better at it and you compound on it and you kind of win the market in it. So it's very important to kind of stick to one product or one strategy. That is one. Then also on the product side, right? Like because financial assets, even though we focused on the investment side, so we actively took a call that we'll not do lending. We'll be focused on the investment side where people have money, they want to invest their money where they should put money. Now that also has a lot of products, right? You can do stocks, you can do mutual funds, you can do gold, you can do fixed deposits, corporate deposits, bonds. Uh, so again, I mean, given we were kind of very naive and we wanted to do everything with limited resources, we started building a lot of things. But that was a wrong approach. You need to first figure out what is your strength, where you can do the value add to the customer, and focus on that. Become better in that, and then only kind of expand. So very important to have clear focus on what you're doing, and not kind of do multiple things. The second important thing was the whole user experience, and this is particularly true for engineers like us. So we typically look at things from the engineer mindset, like there's a problem and there's a logical solution. But things are not that clear and straightforward. So for example, in our case, right, uh, basically we said, okay, people should be able to buy mutual fund online. Obviously they should be do it. They should be able to do it very seamlessly, and they should be able to track it. Now, as basically, I mean, we like say the founding team and all, we were very familiar with the financial investment market, right? We've been working in it, so we know what is IRR, what is XIRR, what is book profit, what is taxation, etc. So we kind of in the product it reflected that. We kind of built and showed everything to the user, right? Whatever is possible for them to kind of get information on that. But we actually didn't think from the customer perspective. So these are retail investors. We don't need to overwhelm them. So it's very important for you to think as a business or as a product owner, what are the top three things which will cover, say, 80% of the need of the user. Because if you, I mean, you can always show 30 things or you can show 50 things, but there's no end to it. It will only complicate things. I mean, it's very important to kind of prioritize what is the most important thing or what is the thing which is used by the maximum number of users. So the whole UI UX is very important. It's not just about kind of giving everything or all the possible scenarios, because again, I mean, idea is to basically offer the best user experience. You need to understand who is the user. In our case, is it like a very professional trader who knows everything, or is it like a novice who's starting to invest, or is somewhere in between? And you need to kind of tailor the solution for that. And for that, it is very important to do the product or UI UX right. And there's an entire science or stream around it. People actually study 2 years, 3 years courses, do research on how it is done, how it happens. And most of, I mean, at least in my time in the engineering college, this was not something which was taught. So uh, uh, you need to be very aware that this is something which is important. And if the skill is not there in-house, in your team or in you, you need to invest in it. Uh, Ultimately, basically the premise is that you need to experiment fast, build a product, a minimum viable product, test it whether it is working, and if it's working, you scale it. If it's not working, you shut it down. So everything, basically, whatever you do, has to have some metric in terms of product, right? So if you're designing product, have a metric, track it. If it's improving, good. If it's not improving, you think it's not working, then you try something else. So that is the whole startup product kind of thing, and that's where a startup can win from a corporate, because they can experiment multiple things very fast. So I'll give you an example of the product side, right? If, for example, I mean, one thing, I mean, when we started as people can buy fresh investments online, right? So they have money, they can come and invest online. But what really clicked for us is basically where we asked users to upload their existing portfolios and giving advice on that. A lot of people had existing legacy of they have done investments. They either want to aggregate it in one place, or they wanted to clean it up, or how to make it better. So that insight will only come when you understand, right? So we launch something, we say, okay, you have fresh money, you invest somewhere, but then we start getting feedback, right? Like, okay, this is about fresh. What about my existing portfolio? Whether this investment fits my existing portfolio. So when you track the metric, you will see that, okay, this is the feedback you're getting. How can you improve the product and move towards what is working? So when we, I mean, finally, basically, about after 1 year, we kind of cracked the product with what people are looking for. And since then, I mean, there's almost 1 million portfolios have been kind of uploaded on a platform for advice. So, I mean, you have to kind of come to that feature very fast by experimenting what is clicking to the user. And especially as an engineer, you need to kind of, if you don't have the skill, you invest in it, you build on it. You can hire people, you can hire consultants. Everything is available on internet. You can also learn yourself. But it's a very important skill to have if you're looking to start up. Third thing, and this like everyone kind of makes this mistake, and we also did the same. We feel that marketing is something less important, but basically it's the, I think, the most important thing what you can focus on. If you have 100 rupees to run your startup, at least 70 to 80 rupees, or 70-80% of resources should go towards marketing. uh, because unless people know about you, they're now going to use it. And in every single conversation, in every single discussion, either with an investor or with a prospective client, uh, they will always ask you what is your current metric, right? So if you're going to say raise funding, right, they will ask you how many users you have. If it's the users are very low, then they will go and check out the product, saying that, okay, maybe they have not invested in marketing, maybe it's not very popular, but I will check the product. But if you say that, okay, X number of users are using it, then it's obvious the product is very good, right? So you have to kind of reach where a lot of people are using it, and that will only happen if you kind of spread the word, or you do networking. You have to figure out where our audiences are. So for example, right, today I need to know whether my customer is spending time on, say, I don't know, newspaper, or reading newspapers, or they're spending time on, say, Netflix, or they're spending time on YouTube, LinkedIn, right? Now, suppose I come to a conclusion that, okay, actually, people are spending time on Netflix, but not on newspaper. So I don't need to focus on any like public relationship activity, or releasing some press release, etc. I need to do an advertisement, but I don't have money to do an advertisement on Netflix, right? And what is the next big thing? Maybe spending time on YouTube. I can write a blog. I can kind of do some articles. I can make and comment. So it's very important to kind of know where the customers are, figure out where you can reach out, and there are multiple ways. It doesn't have to involve money. Today, you can build your personal brand also. You can start posting stuff. You can start sharing your ideas, your concepts on Twitter, on LinkedIn, on social media, and you will start seeing that people are following you, and start building an audience towards it, or a community towards it. A very good example of this is, I don't know if you've heard of a company called Zerodha, which is one of the leading stockbroker in India right now. They didn't spend anything on marketing in terms of actual money, but their whole, I mean, content, the community, the discussions, solving questions from people, all that was very good, and that's how they kind of grow. So this is the, I mean, very important thing which you guys to think, especially, I mean, um, a lot of people don't have these skills, so it's very important to invest in them, hire people, or do consult, especially marketing and design, basically. So these are some of the these are like three mistakes, big mistakes which we made, and I hope you guys don't make it, and you guys kind of at least think about it before you're kind of moving in this direction. Now, because I covered my mistakes, I also wanted to talk about one thing which went right. Uh, so one of the most important thing in startup world is what is called timing. So basically, you need to know what is your market, and if the market is big and is growing, then you will also grow. See, typically, if the market is growing, it's an average pace of growth, and if you're a startup, you're supposed to grow faster than the market. So very important is to get the market right, and it has to be like a large market, growing market. Then it becomes much easier. Otherwise, it becomes very difficult for a startup to grow. So make sure that your market is right, your timing is right. I mean, timing you cannot make sure, but at least you think through it. Whether market is going to grow, are there reasons to believe that it's going to grow? So as I said, we started this space in 2015. At that time, so mutual fund industry was like 25 years old. Uh, and at that time, the total AUM, under management in the industry, was 10 lakh crore. So 25 years old industry, 10 lakh crore AUM, and about, you can see about 4.5 crores mutual fund account over there in the last 25 years. But we kind of thought that this is a time is going to pick up because various factors I told you before, right? Fixed deposits were coming down, real estate was going not doing too well, gold was also kind of very volatile. So we thought this is a time when financial assets will grow very fast in India, and we should start the business. So this is what happened when we launched. Uh, in the next 6 years, from September 2015 to now, the number of accounts, this is industry wide, not Orowealth, from 4.5 crores to 10 crores. So basically, what the mutual fund market did in 25 years, they did again in the next 5 years. So that is the wave we kind of caught, and that is the kind of industry we are in, which is very large now, which is growing very fast. And if the market is growing so fast, you are meant to grow. Because if it's, obviously you will be more innovative in the market, so you will be meant to grow. So this is one thing which is important. You will kind of see a lot of companies which came before the market was mature enough and they didn't succeed. So it's very important to see what market you're in, what is the market growth rate, even though it's not doing very well today, do you expect it to grow? And when you go and raise funding from investors, they will also ask you this question, right? Why now? Whatever you're doing, think through why now. What are, I mean, you can write down what are the 5 reasons you think this will work now. And first of all, you need to believe in it. And once you are kind of sure about it, you can obviously validate it by talking to a lot of friends, peers, other founders, other startups, investors, etc. And then once you're convinced, then definitely go ahead and do it. Yeah, so I think these are some of the things which I wanted to kind of tell you. Manoj, I don't know if like you want to take some questions, and we can discuss now.
Yeah, sure. Yeah, uh, there's a question. How did you do the market research? And basically, when you take the feedback, what are the methods you basically adopt? And when you go for a new product,
Hmm.
basically the question is, what kind of market research do you do?
Right. So in terms of market research, there are multiple things which can be done. One is the actual, you can basically go around and ask people. That is the best thing. You either send them email surveys or you call them up. Obviously, it starts with friends and family first from your network, but you can also go beyond network. You can find people who will kind of try it out. Second thing is in terms of you can see what is there in the market. So what is the next best thing or next closest thing in the market, and you see the feedback of that. So for example, suppose, I mean, in my case, right, I know that I say 10 different competitors. So if I know what people are talking about ICICI Securities or HDFC Securities, you will see a lot of people commenting on what is good, what is bad. Then you will understand, okay, even though it's not my product, I know in that product what is good, what is bad, and I can relate from that. So you can do a lot of competition analysis and see where they're going right or wrong without actually asking anyone. Third thing itself is basically you yourself can kind of use it. Your team should use it and see what works for you. Because if it's not working for you, it will probably not work for anyone. So at least that part you can do it. Uh, and I mean, the most important thing is to not spend so much time worrying about it. What you believe in it, launch fast, but and then track the performance. If it is not working, then change fast. So that is the key thing. I mean, no one really knows what will work, but you need to be fast enough to make things and break things. That is where the skill of the startup is. I mean, it will not come in the first iteration, but because you've done 10 iterations and every iteration is going better, that's where you will kind of crack the product.
Okay. The second one is, but basically, what will be the advice you will be giving to the students of Bhilai or a small town? Like, because there are a lot of ambitions when we talk to students, and students wants to have a startup basically. And now the government as such is focusing more on startups innovation. Now there is a national innovation startup policy. All the institutions have to ignite the students in terms of startups and entrepreneurship. So but what will be the advice you will be giving to the students in small town, because you're already born and brought up in a city like Bhilai?
Right.
How what should be the skills they should develop in themselves?
Right, right. See, first of all, it's very commendable that everyone wants to start up, but it's not so easy. I mean, a lot of stories are not covered of startups which didn't do well. So what I would say is, you have to first make the plan very clear what you want to do, and this will only happen by talking to a lot of people. Uh, if you're not sure, if there's doubt in your mind, you should probably try and join a startup as an employee. That will give you a lot of perspective how things work. You can always start up 6 months later, or you can do like work during the weekends or during off time and kind of build from it. uh, Having no salary and then jumping into a startup world is very, very difficult, because every day you're like a negative carry, right? So your every day will pinch you, and there will be a lot of ups and downs, and many, many more downs than up days, right? So basically you will feel very, very high pressure of doing that. So I would say that if there's doubt in your mind, you definitely start a job or work in a startup or even a corporate. Have some savings and do work in your spare time. There's a lot of time which you can take out if you are kind of focused on it. Uh, and definitely validate the idea with multiple people. See, you don't have to follow everyone's advice, but it's important to know what everyone thinks and says, and then you form up your own belief. So I would say you have to first talk to 100 people and figure out people in different kind of ideas, domains, industry, your potential users, people who have done it, right? So, for example, I'll give you an example. We came across a company called Money Site. They did exactly the same 5 years before we started in 2010, right? So, like we said, okay, this is exactly the same company we're trying to do, and it didn't do well. It kind of shut down. But the person is doing very well, and he's now CEO of ET Money. He's running it now. But we went and met him, right? Like we said, like, see, we are trying this thing. We saw that this is exactly what you did 5 years ago. So, like, what is it and all? So when you go and do all that talking and networking, no, you will get a lot of perspectives. And you don't have to, I mean, see, you don't have to believe everyone, but at least it will get clarity that what you are up to. It will give a clear picture of what you are working against, and then only you do it. So don't kind of work in silo. uh, First of all, avoid the idea, because when I started, when I also thought, like, if I share the idea, then people will take it and execute it. Everyone has a lot of ideas, hundreds of ideas. I'll tell you, when we were working on it, we started working on it from April 2015. We launched it on 15th of January 2016. You know, and from April 2015 to 15th of January 2016, there was no one doing this. No one has done it. Uh, and you'll be surprised to know another guy launched on 14th of January 2016. Completely independent. They were, and exactly same thing, zero commission investing. It's called Investa. So there are already people who have this idea working on it. So don't worry about getting it copied. See, a lot of it is in execution. A lot of it is in execution because people drop in between. Share your idea, talk about it, and I'm telling you, you will not work on the first idea, because as you talk to people, you will get more ideas. And it's very important to network and share your ideas. So reach out to people.
Yeah,
And
exactly.
people are very,
People
very
can copy your idea, but they cannot copy your passion and skills.
passion. Correct. That is the most
Yeah.
important.
One thing, you have worked for 6 years. How do you feel that the 6 years of Deutsch experience has given a boost in your business now?
So, see, first of all, I mean, it's very important for me is a lot of skills what I've learned from Deutsche that give me the confidence, right? Because when I was working in a corporate at such like, so talking to large institution clients, I see that they're implementing what I am suggesting. They're believing my advice, so that give me a lot of confidence that I can actually do something which is good at say international level, or which is at par with global level. So that gave me a lot of confidence. Second thing is it also kind of helped me get interested towards these things about financial markets, financial advice. So one thing I've realized is that I've been able to sustain these ups and downs of startups because I enjoy doing the whole financial advice piece, right? I always we always talk to bring founders that if we start like a food tech startup, because it was very hype at that time to start food tech businesses. There were a lot of food tech startups at that time, Tiny, Owl, etc. Uh, we could not have sustained for so many years because it was just a hype, and we were thinking of kind of going into a hype. But this, because we have worked in it, we have spent so many years, we actually enjoy doing it. So that is also very important to find the passion. And for that, when you work in large corporate, no, you will understand what you're liking, what you're not, and large corporates also help you understand the importance of processes.
Mhm.
So one thing, one thing which large corporates do well is no single person can destroy it. So because it's so distributed, whereas in
Yeah.
startup, like any employee can kind of take away all the data and then just go away, right? Because everyone is doing everything. So you need to understand the processes, the this thing. It's very important. And because of our experience in working in large corporates, we are also able to get clients like RBL Bank, because we talk their language, we understand what they want. So it was very, very helpful, the work experience.
Like personal question. Uh, did you ever like when the process of startup was going on still now also? Sometimes you feel that you miss your that corporate life. Why I jumped into startup or that sort of regret sometimes comes in your mind whenever there's a downfall or a depression.
It's I would say like twice a day. So I mean it's part of that startup life, Manoj. Basically, I mean every time you will feel down, you'll feel why did I do this? I wasted my 5 years of life. I was doing so well. I could have done that. You will see your peers doing so well, who are with you, right? And you will feel that. But the next moment something will happen. You'll say, okay, no, this is right. So it's the ups and downs that's what is exciting about that's so addictive, right? Because I mean some big guy will call and say, okay, like I want to use this, and suddenly you say, okay, that's great, that's what we are here for. But next day is okay, no, I mean not interested, then again you're down. So it's a part of parcel of this life, and once you have tasted that and you've kind of gone through that, it's very difficult to come out of it because it's so exciting. That's the good or bad part of it.
And one more personal, like you have been from a service class background because your parents were in BSP,
Right.
and definitely there's a family pressure, there's a peer pressure,
Right.
not a lot of relative pressure because and the family background as such, you are a first generation entrepreneur as such.
Right.
So how difficult it was to take a decision, a call that leaving a job and entering into the startup world.
Right. Oh, it was very difficult. It was very difficult. And actually, I had a very good job. So it was like a very big decision for me. And obviously, like parents, as you know, right, like are a bit conservative, and rightly so. So it was this thing. But see, somewhere I believe that I wanted to try, and as they say, Robert, like that you need to minimize regret in life. So I didn't want to miss out the opportunity. I told them that this is like the moment when I can try. I can always join a job. If it doesn't work out, I will get a job. That's not a problem. But let me try it right now, because if I don't do it, then I'll have regret in life that I didn't try it. So that's how it started. And over time, basically, they also converted. So they also realized, because they started hearing that what I'm doing. Then their peers also started doing it. Like, yeah, I also use Orowealth. a lot of like my father's friends in BSP use Orowealth now to manage their money, and also so they started hearing that, and over time they also believed, yeah, I mean it's fine, like people can do startup and work on it, but yeah, it's very difficult, it's not easy. That's why you need to be very sure about yourself, and you need to believe in yourself.
Yeah. Thank you, Nitin. It was really wonderful and great to talk to you because, like talking to you, the feel and everybody in this group listening to you may be actually able to connect to you because the journey which you had now almost everybody is in the same pace, same background, like, and you could do it. And a lot of people are actually intending to
Right,
have a startup and a business of their own.
right.
So definitely, it was really interesting and very nice to talk to you, and we were able to connect to you very well. And with best wishes and lot of wishes for your future endeavor. And we are very thankful from the Rumta group of institutions for giving us this time and spending this time, because definitely today is a working day, and in this afternoon hour you have given us this 1 hour of time. We are
I mean,
definitely thankful.
I really appreciate. Thanks for calling me, and I mean, I love to share my story, as I said, because I mean, I obviously I'm a Bhilai kid, so would be happy to help any person from Bhilai. So please reach out to me. I can share my email ID also to Manish. So if anyone wants to reach out directly, I would happy to help whatever I can do. But yeah, really loved this time, and thank you for listening to me.
Yeah, definitely we will require your mentoring because our lot of students are planning or they are doing a lot of startup and they have a plan. Actually, the problem is we require a good mentor, and a
Right,
mentor who has already experienced it will be the right person to mentor our students. Definitely in future we will be contacting our students. We will be in touch with you, and because your experience will be really mattering a lot for our students.
sure,
And
sure.
and we will be there. We will be connected. Thanks once again for giving us this time and sharing us your wonderful thoughts. Thank you, Nitin.
Thank you. Thank you, everyone. Thanks, Manoj. Thank you, everyone. Thanks a lot. Thank you.